Welcome to this latest edition of the Multifamily Collective. This week, I had the opportunity to sit down with Jesse Schmidt. Jesse is the SVP of Sales at Guarantors and is one of the original members of the company. His unrivaled team ranks as one of Inc. 5000's fastest growing companies in the Financial Times fastest growing companies in America. Prior to the Guarantors, Jesse spent 7 years as a New York real estate broker, creating relationships and polishing his gift for integrity and steadfastness in a sometimes ruthless landscape. Joining the company in 2017, he was drawn to the opportunity to modernize real estate through innovative solutions and platforms and create a better experience for operators and renters. In addition to having a seat at the table for growth opportunities, Jesse oversees partnerships and many of the largest multifamily owners and operators in the tri-state area, including the related companies Tishman Speyer, TF Cornerstone, LaFranc, Durst, and Bizzuto. Jesse holds a degree in finance from Bryant University as an active member in the Real Estate Board of New York. When he's not driving the future of real estate, you can find him spending time with his wife, dog, traveling, playing basketball, and dabbling in photography. Now, Jesse and I had a very wide-ranging conversation. We talked about certainly the Guarantors product and the solutions it brings to the multifamily space as it relates to that. We talked about fraud, which is a very hot topic in the multifamily space right now, has been for some time, and who knows, might be for the foreseeable future. But there are many solutions like Jesse and the Guarantors product that are working to combat that. We also talked about business review. I think this is very important for all of us in the multifamily operating space to have business reviews on an annual basis, if not more frequently, quarterly basis or biannual basis with our supplier partners to make sure we understand what the cutting edge of their innovations are and how we're making applications of them. And to look over stats and metrics and things of that nature. Now, as is tradition, grab your favorite beverage right now. For me today, I am drinking Free Reign, and the blend is branded, and I love it. It's spicy. My wife loves it as well. It's a spicy blend of coffee. There's a little bit of kick to it, especially in that sort of going down the pipe, so to speak. Grab your favorite beverage, kick back. We talk about a lot. Enjoy. Jesse, welcome to the show.
Hey, Mike. Thanks for having me on today.
Absolutely. I'm looking forward to this conversation because I think fraud in our industry is certainly right. But before we dig into the content today, I want to open with your origin story. So tell me a little bit about your real estate background, maybe starting at inception and bringing us forward to today.
Yeah, sure. So, I've really been interested in real estate my whole life. My family, my father was always in the industry when I was younger. I have the recollection of back when I was, 7 or 8 years old, and my father actually worked for the Real Estate Book. I don't know if you remember the Real Estate Book, the precursor to kind of apartments.com and Zillow. Before you could look for listings online, people would go and they'd pick up the little magazine. And so he was one of the publishers who oversaw the whole Northeast. And so I remember back in the day, always stacks of these real estate books in my garage, and I would go in there. I'm like, oh, this is pretty. These houses are beautiful. This is a pretty cool, thing. And all the different types of real estate and kind of just seeing all the different designs and all that stuff really interests me. And I think if you want to say when did I start working in real estate, it really was when I was 7 or 8. Because my father would actually bring me to some of the photo shoots he was doing for the magazine itself, and he would do cover shots for the Real Estate Book, and a lot of the readers probably didn't think that a 7-year-old might have been taking the cover photo for the publication, but that was the case in some instances. He'd let me take a couple of shots, and so photography and real estate were definitely two things that I was very interested in. When I was much younger. But then I went to school, went to university in Rhode Island, Bryant University, and I was studying finance. And, as I was graduating, it was just coming out of, pretty turbulent time in the economy, and finance jobs weren't exactly easy to. So at the time, I had a mentor of mine who was a real estate broker. He had his own small boutique company actually in New York City. And as I would go back after each semester, I I would meet up with him, and he'd teach me, the ins and outs of New York City real estate, which is a very complex beast in itself. And it just, really stuck with me. And even though I was at school, I'm studying finance, I was interviewing for jobs at banks, doing internships. Real estate was always just like something that I was like, I like selling, and I like the unique nature of all these different types of properties and the intricacies of, especially in a city with just how much opportunity there is. And so I would go back and forth, and he kind of got me up to speed. And I got my real estate license while I was still at school. And as soon as I graduated, I was interviewing for, Wells Fargo and Chase and some other banks. And I ended up going the route of, hey, I have my real estate license. Why don't I take a shot at just working for this boutique real estate firm? And so I actually started as a real estate salesperson. I said, I'm only going to do this for, 6 months, see how it goes. And I set what I thought was a pretty lofty goal of signing 5 leases. I was doing, at the beginning, only rentals, just kind of getting my feet wet. And I said what I thought was a lofty goal, signed 5 leases my first month. And I ended up signing 10, with average commissions of $2,000-$3,000. And I was like, wow, this is easy. And so ended up, quickly turning into a top producer at my firm. And I ended up doing that for 5 or 6 years. Real estate, I started with rentals, did a lot of condominium sales, and then actually started getting into some smaller multifamily investing, servicing some small multifamily investors. So I dealt with them a lot. I got to learn, a lot of the challenges that they were facing when they were evaluating different types of properties. And these were, 3, 4, 5 unit multifamilies. And so I got to see a lot of the challenges that they had and dealt with renters firsthand themselves. So saw a lot of, the issues happen there with regards to qualifying for the right property that they want, and that whole application process that's, sometimes very stressful for folks. And so that's how I really got into real estate. And from there, I ended up getting introduced to Julian, who's our founder at the Guarantors. And I was very interested in, how behind the industry was with regards to technology. And, there was just everything that seemed to me like it was so, antiquated. And I would hear about PropTech and, hear about all these new innovative solutions and products that were coming to the market. And so I wanted to get involved, and I saw this firsthand being a problem that I encountered, and some of the renters that I was working with encountered. And so Julian, I was introduced to him. What's a quick story about that? Julian, who was our founder, he was a French international student, didn't have, social security number, came here from France to study at Columbia Business School. And he got rejected from a number of different apartments. And he saw this as, why am I getting rejected? Why can't I get approved? And the reality is he had no credit history. He had no standing, no bank accounts maybe open here in the US yet. So there wasn't a lot that they could evaluate him based on. So he sought out to create a solution. He wanted to, find folks who were very familiar with the New York City real estate market where he was going to school. And that's how it all got started.
No, it's a great story. It's interesting when you said learning real estate in New York. There's sort of New York real estate, and then there's the rest of the country. And,
yes.
And in my mind, you get an MBA, if not a doctorate, when you learn about real estate in New York, in the city.
It's true. Yeah. Oh yeah. I mean, from all the different types of properties, the types of owners and operators that are there, and also all of the regulations and different specific rules with rent stabilization and all of the different nuances. But yes, I agree. It took me a little while to get fully ramped up on every other market in the country.
Right.
But at least if you can make it here, you can make it anywhere kind of situation. But yeah, no, I definitely was able to really learn by representing some smaller multifamily players. And also, I was bringing a lot of my rental clients to the smaller multifamily properties. I got introduced to, some of the heads of leasing, some heads of asset management, And so I would try to figure out what solutions, are you guys looking for, and what are some of the problems that you guys are trying to deal with. And at the same time, I actually, as I was mentioning, PropTech was like always in my head. This is a cool thing. One of my friends worked at one of the co-living startups that was just starting getting going. That was when co-living was like just like a new concept of renting by room as opposed to by unit. And so I had spoken to him, and he had like a pitch deck that he sent me because they were pitching their platform to smaller multifamily owners. And so he was like, "Hey, would you mind, maybe pitching this to some of your clients?" And so that's how I got into, looking at pitch decks and selling, and also kind of getting the sense of how the economics worked on the PropTech side, and how the economics worked on the multifamily real estate side, and learning cap rates, and learning, what bad debt is, and learning all of that. So it was very helpful. And as soon as I met Julian, I knew it was a perfect fit, and I could be a big help with getting it off the ground with him.
So let's segue. That's a nice little tee off point for fraud in the multifamily industry is rampant. So let's talk about, maybe introduce the Guarantors a little more intimately, and how long you've been with the company, and really kind of what the core offering is, and what the problem that the Guarantors actually solve. So let's unpack that a little bit.
Yeah, no, it's a great question. So I joined the company about 8 years ago now, a little over 8 years ago. We were 6 people at the time, working out of a closet-sized WeWork in Soho in Manhattan, and it was great because we had a lot of great ideas in a small room, and we were able to flesh them out and create a great product. But really, the challenge we were looking to solve when we first started off, obviously the name of the company sort of alludes to it with the Guarantors, is that with the constantly evolving renter demographic, it's becoming more and more challenging to qualify what could be really good tenants. The types of income people are trying to prove started to evolve. A lot of gig workers, freelancers, influencers, a lot more people self-employed that didn't have your traditional W-2. And also a lot of folks coming from overseas, like Julian, without credit history, coming here to go to university. And a lot of those folks just had either very limited options to find housing, or had no options and weren't able to qualify for essentially anything. And so what we were able to do is really create a product that helped provide peace of mind to owners and operators, and increase accessibility for renters. Really creating a win-win, leveraging an insurance product that allowed us to essentially create a rent guarantee. So what we offer is a rent guarantee for property owners to help protect their assets against bad debt, against vacancy loss, against any sort of rent default. And then what we added on to that is a deposit alternative as well, to help lower the upfront cost for residents while helping them access the homes that they want. Eliminate the security deposit of having to put that in escrow and hold on to that for months and months. And so what we created was a combination of a deposit alternative and a rent guarantee, helping operators, lease up properties faster, mitigate their risk on the back end, and really create a great win-win solution for everyone involved.
Yeah, that makes sense. So I know we spoke a little bit before we hit the record button. You mentioned just briefly their lease ups. It sounds like there is a real advantage, a distinct advantage with your product in a lease up environment. Do you want to talk about that a little bit?
Yeah. So, I mean, as you know, there's so much new inventory, especially over the last 2 years that has been coming on the market.
That's right.
It slowed down a little bit with development, but as far as new deliveries, it hit a record high this year. It hit a record high last year as well. So there's a lot of new units that have been coming to the market, and there's a lot of competition. And what we've seen is a lot of owners that we're working with, they budget 18, maybe 20 months
That's right.
to stabilize a new asset, a new lease up that they have. And what we come in and do is say, look, our product is free for owners and operators. It is paid for by the tenant. So it is not an increased cost, because we know owners and operators, their costs are skyrocketing. The last thing they want to do is have to pay for another service. to help
Sure.
them, with their operations. And so we come in with a product that is free for them. It's going to help them lease more apartments without increasing their risk. And it opens up the pool of qualified renters for these new lease ups. And there's so many, whether we're talking about Miami, we're talking about Atlanta, we're talking about New York, San Francisco, all of these new properties coming up. It's just such, again, a unique mix of renters that are coming in. We get, we help everyone from, like I mentioned, social media influencers. We help. Recently, we guaranteed a corporate lease for a expansion soccer team. Where they were signing for 11 players, all coming from overseas, new soccer team here in the U.S., but they had no credit, and the company was the one signing the lease. But the owner, it's a brand new lease up. They wanted to lease those 11 apartments, but there's a good amount of risk there with this as a new team that's being formed and players coming from overseas. And even in New York City, there was one instance where we helped a firefighter, qualify for a house that he was, he made good income. His wife was like in between jobs, and so to meet the income criteria, he needed a little bit of help from the guarantors. So it's such a there's such a wide variety of folks that we could help, and in the lease up environment, being able to cut that timeline to reach stabilization from 18 months to potentially 12, which we have a number of partners where we've been able to help them accomplish that. It's a huge boon for them. Being able to refinance quicker, being able to get the rents that they were striving to get when they launched the project. We've been a huge help with regards to that. And you did mention fraud. Fraud is huge, and we're just one of the layers. I think it's got to be a multi-pronged approach to attack fraud. And I think there's a lot of really great softwares and verification platforms out there, but nothing is going to completely eradicate fraud. And what we are is one of the parts of that protection. If someone who is fraudulent ends up slipping through even the best fraud screening software, we're the rent guarantee on the back end. We're the kind of safety net for the owner operator. And we also do screen for fraud in our own underwriting process. So we actually do look for SSN fraud, which is becoming more and more common. People who are providing social security numbers that might be of a similar name, similar individual with maybe a similar address, but it is not that person. And so there's a lot of ways in which fraudsters and sometimes rings of fraudulent applicants have gotten very creative. And so we do screen for that within our process. Not everyone qualifies for our rent guarantee. And so we're trying to weed some out on the front end, but on the back end, we're guaranteeing up to the full lease value for our partners. So in the worst case scenario, we're going to make them whole.
That, it's interesting. It seems like, as it relates to fraud, every time I'll speak for myself, but every time I think that we're getting ahead of the fraud problem, the bad actors out in the marketplace, they're employing technology just like we're creating technology. They're creating technology to create fraud, right? Or to administer fraud. And it seems like it's a never ending game. So it's, as a former owner operator myself, I really appreciate when products like yours come along. They can backstop it, but also, to your other point, there are other solutions out there on the very front side that are doing their best to keep that at bay. Atlanta happens to lead the league, I think, or at least as I can remember, lead the league in fraudulent activities.
Oh, yeah.
So it's nuts, but I appreciate you for doing what you do. I'm interested, and maybe this is an obvious answer, but I want to put it out there anyway. We work in multifamily, but I imagine your solution is germane to single family home rentals, built to rent communities, student communities. It doesn't matter the sort of the nuanced asset type within residential housing. Is that fair to say? Product fits all asset types?
Mike, yeah, that is a great question. It's really agnostic. We're actually now expanding into, it's funny that you asked that. We're expanding into the single family space, the student space we're actually already in. We provide a unique product for each of these. And what's great is our protection is really the most, comprehensive in the space, where you could guarantee up to the full lease value. You can customize deposit protection, which is really going to allow you to cover for apartment damages and other things that might be more common in single family housing. And then for students, really eliminating the need for a guarantor for a lot of the partners that we've started working with has been huge. I mean, requiring guarantors on every tenant in student housing is not only on the front end a huge hassle for on-site teams collecting documentation, qualifying guarantors, but on the back end, if someone defaults, there's no guarantee there that you're going to be able to collect from those parents. And a lot of times, I remember when I was living in my college house, we had 5 roommates of mine, and we had 5 parents who were co-signing. It was a mess. And so this replaces all of that. You don't need to figure out whose parents are going to co-sign as the operator. You don't have to go chase after, mom and dad in the event that their son or daughter end up defaulting. So in student housing, we've created really like a blanket coverage solution for those types of communities. And for single family rental, a lot of times we'll increase the amount of deposit protection because some of the needs on their end are more related to apartment damage and some of the things that might be covered under a security deposit. So increasing their protection there while also giving them the rent guarantee. But it is agnostic. We actually have our team, it's actually called Emerging Solutions. And we really want to create a custom tailored coverage package for each of these different segments of the market. But yeah, it's not. And in addition to the institutionally owned single family rentals, we're actually working with the mom and pops as well. We created a self-service platform where any size landlord could actually go on and enroll their properties because we know they're really the most vulnerable
That's right.
Operators out there. And one tenant defaults, they may not be able to make the mortgage payment. And so this is a great solution. We had so many small mom and pop landlords that had reached out to us and wanted to partner with us, wanted to leverage the products that we have. But unfortunately, it just we didn't have the ability to scale it to that long tail of the market. Now we do. So we created a self-service platform where you could get signed up on our platform, enroll your properties, and get coverage on a tenant same day. So we made it a really simple process for really any sized owner to get our coverage.
That is fantastic. It's, two things I'd say. I have a daughter who is in college's second year. And to your point about guarantors, prior to knowing about the guarantor, we actually went through the other process that you just described where we're signed up with 3 other families. So
it's fun.
TBD or more to come on that point. And then opening up, it's interesting. I don't remember the stat off the top of my head, but I think institutionally there are only 15 or 20% of the units in the United States. I know my math is wrong or my stats wrong, but a small number of housing units are actually owned institutionally. A lot of them are owned by mom and pop organizations, even if that mom and pop is 200 to 500 units, or maybe up to 5,000 or 8,000 units. It's still, they're small. And to your point, one bad resident and you're wiped out. You could be wiped out.
Exactly. That's why, we knew that population of landlords, owners was the most vulnerable, and we wanted to make sure our products were accessible to them. And so we spent a lot of time, developing that. We created educational resources because, we have a sales team, for our larger multifamily, larger institutional partners. They have a full support team. They have our, account executives, partner success managers, our whole customer success team. And we try to emulate that with the smaller mom and pops that we partner with as well. We give them resources. They have access to our customer support team, and they actually have capabilities and functionality within our dashboard that some of the institutional owners don't even have, like the ability, again, to enroll a new property that they add to their portfolio or adjust coverage on the fly. So it's really it's a solution for anyone. Again, doesn't cost the owner operators anything to leverage our core solutions with the rent guarantee and deposit alternative. So it's really a great option to put out there. And again, it's creating, you look, even going on Google and looking at some of the reviews. I was reading some yesterday because we had gotten some new ones that came in. And I mean, for the renter though, even though they are the ones paying the fee, there's so many of those people that I described before that they just either
That's
have
right.
very limited options on where they can get qualified for an apartment, or they can't find any at all. I mean, there's some people who literally said we had a single mother who just could not. Her lease was ending, could not qualify for a new home, and she was like, the guarantors was a godsend. You know, this was something that if I didn't have, I may have been homeless, not been
Yeah.
able to find a property that would accept me, that would be willing. And yes, as we mentioned, fraud is huge, and you want to be very careful. And I think the application process for years was never really innovated. It was very
That's right.
pay stubs, PDFs of documents, and I think now it is starting to evolve and not only evolve to become digital, but evolve to account for all of these different types of ways in which people earn money now. I mean, there's people who get paid on Venmo. There's people who
That's
get
right.
paid on Cash App, and people who just don't have even if you're getting paid 1099, that's not consistent year over year. So there's always a little bit of risk there. So it really is something that is helping all of the parties involved.
Definitely. I want to stick to the topic of fraud for just a second, and I want to key off of something you said just a second ago about you have an internal team that is looking out at the horizon, or at least the way it's translating in my head. You're looking out at the horizon and you're trying to tailor solutions to specific segments of your addressable market. But my imagination tells me that you have somebody internal who is also looking at the bad actors in the marketplace as it relates to fraud. Can you talk to us about some of the trends or some of the data that you're seeing as it relates to fraud, and maybe potentially how your team is looking at that in terms of solutions or trying to stay ahead of it?
Yeah, of course. It's a good question, and you mentioned it before. It's constantly evolving. The technology on our end it's tough to keep up with the technology on the fraudsters end, and how rampant it is. You go on social media, you can find
That's
within
right.
seconds a way to purchase a fraudulent pay stub or create a new identity. But some of the data, what we've been seeing, we interviewed operators that we partner with, and more than 80% of them saw in the last year or two, they saw a more than 25% increase in fraud, and almost 60% of the operators that we interviewed saw a 50% increase in fraud. So it is, and you mentioned Atlanta. Obviously, there are certain hotbeds, certain markets where it's more rampant. But even in New York, Long Island, and surprisingly, in Long Island, we've seen a lot of fraud rings in that area where it's even more sophisticated. It's not just one individual who's doing this. It's a lot of these fraud rings have figured out ways to pass certain screening software. And so what we do on our end, we have an entire risk team, and I think this is one of the big differentiators between us and maybe some of the other players in our space on the insurance side. Is we've always been extremely risk averse. I've always built our model to assess risk based on a worst case scenario, and that worst case scenario was COVID. And for a company like ours, who's sitting there holding the bag for everyone on their rent, when you got eviction moratoriums, you got tenants who maybe could pay rent but weren't paying rent. You've got international tenants who just went back overseas and skipped out on leases. So that was a worst case scenario, but luckily we had modeled for that. Again, we were not approving everyone. We actually have a risk model that now we're in our, I think, fifth iteration of, and it's really evolved. It takes into account hundreds of thousands of data points and can really assess the probability of default, the risk that an applicant is posing, at a very accurate rate. We're at about 90% accuracy with predicting whether or not a tenant's going to default. And baked into that are certain checks with regards to, again, SSN fraud. We do check IDs and that sort of stuff. But the owner still has to screen applicants. We are not replacing screening. We're an added layer, which, like I mentioned, there's a lot of folks who will slip through even the most sophisticated fraud screening software. And on our end, typically what we're doing is we're requalifying the conditionally approved and the denied applicants in some cases. But it has been a huge saver. I mean, we've spoken recently. I was doing a business review with one of our partners, and we covered them for more than $300,000 of bad debt that they had over just the last 12 months. And we were guaranteeing upwards of $23-24 million for them across their portfolio. But to eradicate completely $300,000 of bad debt in 1 year is pretty impactful for a product that didn't cost them anything, and actually allowed them to qualify and fill more vacancies than maybe they would have otherwise. So it's a got to be a multi-pronged approach. You got to attack fraud from a number of different angles, and we're just one of those angles that's going to help.
I'm curious, as it relates to your underwriting and sort of the data points that you use for underwriting, is there sort of a behavioral economic marker that you use in your underwriting? In other words, here's how my bank account activity behaves, or me, but my bank account is a representation of the way I behave in the marketplace, or even more broadly speaking, the way that I behave out on social media and things of that nature. I'm only asking because I've been, in other conversations where people have brought this up as part of a qualifying criteria. And I'm just interested in how you might think about that, if you are thinking about that, and how it is maybe baked in.
Yeah, we definitely are thinking about it. I would say, social media presence and that sort of stuff is not fully baked into our evaluation today. However, in certain markets with certain accounts, one thing that, we've actually helped operators look out for is Airbnb. Because that's another form of fraud where someone has intentions to just use an apartment as an Airbnb when it may not be legal in either that property or that municipality. And so we did for a time help a lot of our operators, some folks who we flagged as based on to your point, either transactions in their bank account or stuff that was online. With regards to them having a presence on Airbnb, VRBO, and some of the other, short-term rental sites. So that is something we've been looking into, and we do want to take a much more holistic view. I mean, again, the antiquated look at credit, look at income, and that's why whether or not they're going to be approved is, we understand that's not the best predictor of who's going to default. We can approve folks who are in between jobs. They may not have income. I mean, we're approving students who don't have Social Security in some states, don't have U.S. credit history and don't have income, or have parents who are overseas. So we've understood based on looking at data that we have that there are some red flags, there are some things that we want to look out for, but we want to give more people a chance to qualify, even if they don't make the perfect income or they do have to repair their credit. We have a ton of people who their credit was hurt during COVID for whatever reason. Yeah. There were situations where they dropped 100 points, 150 points, and maybe wasn't something, so dramatic that, they should have dropped that much. But, we look at the credit report, very specifically charge-offs, what bankruptcies, into the details of like what is in there, what might have caused that drop. Is it as, risky with regards to why it dropped versus maybe the other reasons that we've seen and we've pegged to much more high correlation to default risk. So we are taking that full approach, and I think our partners appreciate it, that if they're going to be referring us a denied applicant that didn't qualify originally, they want to make sure we're doing some research on this, even if we're backstopping the rent and paying them a full 12 months if the tenant defaults. They still want to make sure they're putting good tenants in their properties, and we do help them do that.
That makes sense. I want to key off something that you just said. Business review was the term that you used. It brought to mind sort of a strategic partnership. And when you're sitting down doing a business review with a client and you're helping them think strategically about the future as it relates to what you do, can you kind of a day in the life of, or if we were a fly on the wall and we were listening, what are some of those conversations like? I think that'd be very valuable for our listeners and our viewers to hear about a conversation.
Yeah, of course. So that's definitely a regular part of our partnership with our owners and operators, and not only heads of asset management and heads of leasing, but also on-site teams. We meet with them regularly to see how is conversion looking. That's one of the big things we look at. We want to make sure the price of our product, which is paid for by the tenant, is within a range that the tenant is willing to cover, that they can afford.
Mhm.
So we always want to make sure it's affordable. So we monitor very closely conversion rates. We adjust coverage levels. So our coverage is a lot of times we're going to make recommendations based on where the properties are located, what the typical demographic looks like for tenants in that area, and sometimes we adjust. So when we're looking at in a QBR, our quarterly business reviews,
Mhm.
we're looking at what was the average default that we've seen in their portfolio, what was the lengthiest default, is the amount of coverage that they're seeing covering them, not only for their rent default, but also vacancy loss, which is something that we protect for. In certain markets, it might be a month that they could get a unit relet. In others, it might be 90 days.
Sure.
And we're also covering for holdover. We're covering for no shows. We're covering for lease breaks. So we want to make sure that price and coverage is at a balance that
Mhm.
works for everyone. So that's usually a key aspect of our business review. Digging into some of the folks who may have defaulted and seeing if we can find common denominators. That's another big one. And really, like I mentioned before, a lot of times with new lease ups, meeting with them regularly, helping them to understand the different types of applicants that either we couldn't qualify on our end, or folks that we did help them get through, or like as I was talking about before, a tricky situation like a corporate lease for 11 apartments. That was something we went through, and we
Yeah.
helped them understand what documentation we would need in order to guarantee the full 11 apartments. So that's usually the stuff we're going through, is coverage, conversion rates. What other challenges are they seeing too? I mean, we not only do the rent guarantee and deposit replacement, we also launched a new product recently, which is our zero gap renters insurance. And really what this product does, and this is another challenge a lot of operators face, and it's similar but slightly different than our core product. Tenant liability. Tenant liability is huge. The increased cost of insurance premiums for underlying PNC policies is skyrocketing, and making sure that every tenant in a property has renters insurance in some cases has been a priority, and in others it hasn't been. And so what we come in and provide is a digital solution to monitor renters insurance compliance, and really a full stack solution, because it allows renters to buy traditional HO4 renters insurance from us. We actually have the ability to digitally link, similar to like open banking technology with like a
Mhm.
Plaid type
Yeah.
software.
Yeah.
We can
Yeah.
actually link directly to other renters insurance providers, a Lemonade, a State Farm, and Allstate, and we could extract policy information, because that's a surprising stat, is upwards of 40% of renters cancel or allow their renters insurance to lapse after they
Right.
buy, after they provide the proof to the leasing team, look, I got my renters insurance. So
Right.
what we're doing is helping eradicate the lapses of policies, the cancellations of policies, helping the on-site teams track that and save time. So the reason I'm mentioning this is during our business reviews, a lot of time we do a little bit of discovery. Is this a challenge that you guys are facing? Is it a lot of times what we hear is on-site teams spend hours and hours, collecting manually renters insurance policies, uploading them into the property management software, and on an ongoing basis, knowing whether or not someone has canceled that policy or let it lapse is almost impossible. The insurance space on that side has not really moved into the digital age. And if someone cancels a policy, they're sending a piece of snail mail. They're not
Yeah.
sending an email notification. They're not, there's no dashboard you could go to. But what we created is that dashboard. What we created is instant notifications for properties when someone's policy lapses, whether they bought it through us or they bought it through another company. And then what really brings it all home is the third layer of our zero gap renters insurance, which is a master policy. So anyone who does let their policy lapse, or anyone who doesn't go out and buy their own renters insurance, we're placing them on a tenant liability master policy that covers the property for any of that tenant caused negligence, any damages, any of those issues. And the tenant just pays a monthly fee. They don't have to go out and purchase it themselves. So those are some of the things that we've heard inefficiencies in the leasing process, and we've heard of the horror stories of fires in units, and those units did not have renters insurance, and they have to file that against their underlying PNC, which then bumps up the insurance premiums in following years. So what this does is actually shields having to file claims against that underlying policy for the property.
Yeah, definitely. That's, I hate to admit this, but it's I'm coming up on 30 years in the industry, and to your point about time, there are so many things that I'm going to call it burden the on-site team members that take away from what I would consider to be high value activity, like being able to sit without distraction and have a conversation with you, a meaningful conversation, because I have to monitor my insurance that's lapsed, or I have to monitor any number of things, right? I've got 67 dashboards. That's no exaggeration in some cases that I need to pay attention to, but to the extent that companies like yours are monitoring those things on my behalf, it gives that time back to me to have those high value touch points with my resident base or prospect base that's coming into the community. So I really like what you're doing. I really like what your organization is doing in terms of giving time back to our on-site team members. It's huge. Do you have any estimation as it relates to kind of what your bundle does in terms of giving time back to our on-site
I mean,
teams?
on an annualized basis, it's hundreds of hours. I mean, we talked about fraud,
Yeah.
the kind of detective work that the on-site teams have to do to try to weed that out. Having the backstop of our coverage on the back end, just again gives a little bit more peace of mind. It eliminates some of that hassle. The renter's insurance piece, that alone is hundreds of hours of
That's right.
on-site teams' time on an annual basis. To your point, collecting it up front, tracking it, whether it cancels. And one of the big things you mentioned, it logging into 100 dashboards. We're centralization is the big topic of the last few years in multifamily, and what we've done is we've consolidated. So now instead of logging into 3 different dashboards to have a deposit alternative, a rent guarantee, renter's insurance, compliance solution, we have them all in one. It's one team that you have to speak to, only one company you got to go to when you filing claims. So it consolidates. We like to think of ourselves as the consolidator within, multifamily insurance, and really a risk mitigation partner for these properties. So consolidating in itself, I think, saves a lot of headache and time. The renter's insurance solution is a huge time saver, and another piece that's not only saving time but also saving money is, like I talked about with new lease-ups, efficiency of marketing spend, efficiency of the on-site team's time, showing apartments. There was a point in time during COVID where denial rates spiked dramatically.
Yes.
I mean, rent growth was outpacing wage growth. So,
That's
it
right.
was just getting more and more difficult for people to meet the income requirements. And so what we've done is helped make the marketing spend more efficient. And instead of a leasing agent having to show 10 individuals an apartment and converting only 4, we could turn that into showing 10 and converting 6 or 7. So just making the showings more efficient, making the application process quicker, no longer having to collect guarantors documents when you're talking about student housing. That's another big one is, how long that takes with the 3 parents, 4 parents having to provide all that. That's gone. So there's a lot of time savings baked into the solutions we're providing, and again, doesn't cost the properties.
That's music to my ears as an operator or a former operator. It's I
Trust
want
me,
to exactly. I want to so to the extent that you can share any sort of forward look as it relates to whatever you're seeing on the horizon or your team is seeing on the horizon, whether it be innovation and or potential headwinds related to your business or the business of owner operators. I'd love to hear a little bit about that before we wrap up here, and I give you an opportunity to share where people can touch base with you and or learn more about the Guarantors. So any forward looking things that you can share with our audience?
Yeah, I mean, obviously no one can predict what's going to happen with this wild market the last few years. And, I what I could say is I know, expenses are probably going to remain high for owners and operators, and interest rates don't seem to be coming down anytime in the near future. And so margins are tight. And so we get a lot of operators who reach out to us and say, okay, my bad debt is 7% or 5%, or sometimes upwards of 10, 15%. We're trying to really stabilize our bottom line. And I think that's going to continue being a trend where, if you can eradicate or eliminate the vast majority of your bad debt, that's going to be something you're looking for a solution for.
Right.
If you could generate ancillary revenue, our renters insurance tool allows property owners to actually generate significant amounts of ancillary revenue. So not only is it not costing them anything, they could actually generate some money off of that. And so, in the environment, the economic climate environment that we're seeing right now, I think owners and operators are going to continue to face those headwinds they've been facing recently. And now with the slowing, rent growth, it makes it even more challenging for them. So, what we're coming in and doing is helping them lease to more folks that maybe otherwise they would have had to deny. We're helping eliminate that bad debt, speed up their leasing velocity, eliminate these tenant-caused issues, and also potentially create some ancillary revenue for them on the back end. So it is, it's something that I think we're going to have to keep looking for solutions for and keep dealing with. And you mentioned, fraud, I don't think is going to get any better anytime soon. The COVID age is what really brought it out.
Right.
You used to actually have to meet someone when you show them an apartment. Now it's become much more digital. It has just opened the opportunity. And I think it's going to continue to move in the virtual tour and, sight unseen kind of environment. So that's going to continue to evolve, I think. But the good news is for multifamily owners, I think, is that renting is going to continue to be the trend for most younger individuals. Myself being a millennial, I understand that the flexibility that renting provides is honestly one of the main reasons. Even if you're starting a family or you just got a new job, your new job might be remote. You may not know exactly what schools your son or daughter wants to go to. So having that flexibility to move and also the affordability of buying what might be a starter home these days is pretty unreachable for a lot of folks. So I think the trend of renting being the go-to for younger folks is going to continue going in that direction. And I mentioned we had a lot of new deliveries that have come on the market the last 2 years, but new construction has slowed a little bit.
Sure.
I see that picking back up. As soon as the economics make sense again, the demand for rental housing is going to keep going up. So that's definitely the good news.
Yeah, I think you're absolutely right on all of that, all of those points. It's going to be an interesting next 3 to 5 years in our industry, and as rates come down and development starts again, and I forget what the number is, but it's a big number of housing shortage, right? That we're going to have to. So supply is going to pick up eventually, and so none of this is going away for some long bit of time. So. Jesse, it's been an absolute pleasure. I want to give you the opportunity to tell our listeners, our viewers, where they might find you online and or find out more information about the Guarantors.
Of course. Yeah. So if you want to reach out to me personally, my email is Jesse, Jesse, at theguarantors.com. And our website is theguarantors.com. We would love to speak with you. We work with, as I mentioned, multifamily, student housing, single family rentals, even smaller mom and pop shops. We're a great solution that I think at this point in time is something you want to definitely explore implementing and give us a call and see if we could help out.
Jesse, thank you. It's been a pleasure.
Thanks so much, Mike. Have a good one.